fiat system, the dark state, and the government. They are sizing you up, measuring you, capturing everything socially relevant on you. And it's not necessarily for a good reason in terms of you. So preparation is key. Don't trust the things you are being trained to trust.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for March 25th through April 1st, 2024, while supplies last. First, we feature 2023 1-ounce silver Krugerrands at $3.10 over spot. We also have backdated 1/10-ounce gold Canadian maples at $35 over melt with a minimum order of 4. And finally, we're offering our choice 1-ounce palladium bars at just $119 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is the market sniper, Francis Hunt. Francis, thank you so much for joining us today.
Delighted to be back with you, Elijah.
Well, it's great to have you and a perfect day to have you back here as we're seeing gold make quite a bit of a run here back towards the $2,200 level. Your perspective on what we're seeing.
We're very happy with what we're seeing, as you can imagine. We've actually just had a structure that's performed to target. When we go up to the charts, I'll show you that. And that's why after running the 2,210, I think it made all the twos. We then got a bit of a pullback. But already it's set up again and it's going again. In fact, we're seeing gold almost in nice setups on other crosses. So the dollar is also part of the equation. And we've been talking in our community about a gold pound and a gold euro. So remember, there's people and in fact on trading platforms we can trade gold against some of the other majors too. So dollar's been a tiny bit firming. And it's muddied the water on some of the structure technically for it after that 222 run, all the twos, 4 twos. But we're actually seeing it looking pretty perky on the others. So we expect it to make new highs, but we're expecting better performance on gold against the other currencies, the other majors. So it's awesome. Yes, it's absolutely awesome. And I think it's starting to count. I suppose if you're asking for my state of the nation in terms of the precious metals, this is still very much the early stage, and this is the gold dominating stage. And the biggest question for those that are over positioning too soon, too aggressively in silver is when silver. And if that's a question you're interested in me putting my take on, I'll happily do that, although we've discussed it before. But in the beginning, this is how it goes. Really big cycles need the God market, gold, to be the predominant mover in the beginning, and everything else tends to lag, and it's the most consistent. We've seen this repeat in much smaller cycles in Bitcoin versus the alt market run as well for those that are engaged in crypto. But essentially, you need the big boss to move, and the big money moves first. It's the best informed money. It's often the central bankers themselves that know the state of the nation, and also very high net worth individuals. If I'm looking to park up 10 million or 25 million as a high net worth individual, it's going to be gold, not silver, because I need a massive warehouse for the silver in lieu of price. So the density of value of gold plays a role, and it reduces the storage costs and other elements. So the God market is gold, and we're still in that phase. I think too many people, if I'm going to be a doctor of diagnosis in terms of my feedback on YouTube channels and other things, over position for the next stage of the cycle. And it's kind of like being a heptathlete where you've got all these events you've got to do. You don't want to do the 100-meter sprint already carrying your high jump pole. You've got to leave that. It's not time for high jump. It's sprinting. You're going to get left behind and you're going to get absolutely rinsed by all the other sprinters. So the point of the matter is to play what's in front of you right now. Gold dominance is what's in front of us right now. And silver's day will come, but it will be a much narrower window and a far more violent one. And it's kind of the same again in crypto markets, which is sort of taken after the precious metal markets for those that have that exposure. So that's my state of the nation speech for precious metals and how I'm seeing people's frustrations manifesting.
Now, what are we seeing then with the chart, if you want to pull that up, and the signs that we're seeing, some of the levels we should be looking for a further breakout here? It seems like it has broken out maybe of that downward channel we were seeing ever since we made that new all-time high.
Yes. So gold has done phenomenally, in fact, and it's broken the 2K, which we said was a seminal level. And this is now steadily working its way up quite consistently to our doorstep of our 2,900. I think the 3K is the next bulking point, but that's not going to be overnight again. And we're going in staircases where we're making a level, we're consolidating, we're having a pullback. Just to show you on a smaller time frame, we had this structure. We spoke of this on one of our chats with you about we think there's a larger continuation pattern coming, and the target for that was up there. And that's why we were fortunate enough to get such a great exit on that wick. During that period, you were at a stalling point, our second interim for our targets, and that created a falling wedge. And we got back in on a tiny structure in here. That gave a great risk reward as well. So we got back in there. So I actually had existing entries and I put further entries in there. So we had a great trading spell on gold out at the same point. And you can see it sold off fairly firmly after that. So it's still not overwhelmingly parabola, like a runaway parabola. It still helps at a trading level to take something off the table every now and then. The dollar is still trying to do its best to maintain, to not allow the gold canary to tweet too loud in the mine. So we're sort of staircasing on the low quietly, and everyone's not referencing it, but it's slowly doing exactly what it needs to do. And if I go to those other currencies option, and I just show you a little bit of what we've been playing with on the lower time frames now, with silver, that's gold, a euro. In fact, I think we prefer the gold pound. I'm just going to bring that option up for you. You can see that against the other major currencies, the euro being one, but also the pound, which is our favorite in this particular trade, we're seeing the fact that there's another setup on a lower time frame. It's about the 30 minutes. And again, it's generating targets and we expect upsides. And, we have a very simple tool that we generate our draws. So we do one thing, and it's volatility squeezes. So we were expecting gold to have a good spell, and it's exactly what it's doing. A follow-up after that initial rest after running 2,200. So on the pound, for example, this won't help your US audience particularly because they won't be trading that, but we're still seeing a level up top here of 1750 being run on the pound. And similar levels on the euro, I think around 2,060, 70 on the euro. And that's all going to be encompassed in further highs on the dollar. It's just more muddy on the dollar. We're not getting the technical setup. So that tells us possibly we're going to have a little bit of dollar dominance and a bit more weakness in the British and the European currency during that period. And those are tradable. So it's beautiful, the structures. Those are triggering events. That's our second interim, so we expect a pullback. It's resisting again there, but longer run, our on balance of probabilities expectation is we run that 1750. So I continue to have general good news for the gold market, working its way up pretty steadily and consistently to the high side. So it remains a hold. Again, that question then comes, but when silver? And I will just remind everyone, we've covered this with you as well before. No one's going to give you a day and date, but we will give you a set of circumstances when it comes, and that is typically going to surround two questions. When silver, and could there be a major demand-destroying event between now and then? And how will you know when? And I would like to, preempting your question around silver and other groups of it, almost say to you, those two questions actually have a little bit of an overlap in them. That's why I've dragged the other one into it. The first question, when silver, is determined by the gold-silver ratio. And we've done draws and discussed this with you many times, that we're in a bit of a channel here, and then not until, so when we traded the gold up, we chose to trade gold, we didn't trade silver. Why? Because it was still showing relative weakness in its relationship with gold. So this is still stage one. You're doing the 100-meter sprint. You're not yet on the pole vaulting stage. You've got to just stay with gold at a trading and even at an investing level for now. You can see we're on the high side, 90 on the gold-silver ratio is up top here. It's grinding up. And we didn't look at silver. And when silver got up to its capping descending grind line, I'll show you that in a minute now, we felt it would not break and it would be rejected. We've cried wolf too many times to trust. And so we have, okay, when will we take this silver bull part really seriously again? And what we need is the gold-silver ratio to return to this level on the low side and look like it's going to give us some small time frame technical pattern to show that it'll break down. And as the gold was running, silver was actually up top here. So it's not going to happen. I'm not going to trade the silver. Normally it's the higher beta in a bull market. It's not ready to bull. We're still in stage 1. 100-meter sprint. It's not pole vaulting season yet. That's why we traded the gold and we ignored the silver's rally. It will respond in kind to a degree, but not with any great conviction yet. So I'll show you that silver if you're happy with the direction I'm taking you here. Draw, and we just put the lines back on. Again, there's that red capping descending grind line. We have it like that. We just didn't trust it. It did have a move up impulsively. We're showing you here. But it just didn't have breakout momentum. And we've seen it be rejected there, and there. And we have one of the biggest continuation patterns building up over here. And until that gold-silver ratio breaks out of that channel, we're not going to go, okay, now you trade with, if you have a method, your silver, or you start swinging some of your gold ounces into silver ounces. That's not yet the time. And you must play. Most of us don't live in the present. We're playing the next game. We're living in the future. We're thinking what comes next. We're trying to preempt. Sometimes you just have to be in that moment, and the moment is a gold-dominant bull market. And the part 2 question, and I'm monologuing for a while, so if you want to jump in, please do. But the demand-destroying event, that could be the trigger as well. It plays a role, and I often get people ask the same questions. When's silver going to run, and when's this potential demand-destroying event going to come? Because both precious metals will sell off. The cure they will bring, however, will trigger both and will absolutely accelerate silver to a higher beta, and that could be the point. So if I take you into that next question and answer, if you're happy with where I'm leading you, the demand-destroying event will, in my opinion, will be on a short fuse for that. Whatever form it takes, we can speculate. Other people can speculate. My guess is not going to be any better than yours, is when the yield curve reversion goes back above 0 on all the major yield curve reversions. So that's a totally different chart, and we've set tons of alerts. We're waiting for this. It's kind of like these are triggers. So gold and silver ratio trigger the break of the channel. You want to pivot most of your buying and stacking to silver then, and you might even rotate some of your gold, getting your high relative value of gold into silver ounces. And if you're a technical trader, which is what we do, you can join us and technically trade that with a small amount of conservative leverage with known stops. Here's these yield curve inversions. So answering the question on when the demand-destroying event, that's the 0 line. I'll just make it super fat so it pops for everybody there. That's the 0 line. We have been in one of the longest of the modern era. So from Volcker to today, this is by far from, it has gone longer further in the 50s and 40s. But of the modern era, if we refer to 1980, and it's quite some time ago now to call it modern, you have never had such a scale of inversion as we're in now. And the bigger the dip, the bigger the resultant crisis. Don't forget the one before was pretty large by all measures. So this is technically suggesting that it is coming back up to the 0 mark. That will be the trigger for hold on. Don't buy any more of anything. You're going to get a discount sale. And in that discount sale, maybe go for the silver this time. So that will also help potentially be a cross-reference. So you're checking, the lengthways and breadthways on this. We really want to get the sites spot on here. A cross-reference for when, in fact, silver will become predominant, and it may require that event, that acknowledgement of the recession, whatever the case may be, maybe a hack. As I say, I won't spend your time speculating on that. But I don't know if that's interesting for you, and you let you back in there.
Yeah, and it is interesting to see that the yield curve inversion could head up. It seems like above that zero line there pretty soon here. Why do you think that will be the triggering event to have silver move? Because it seems like silver is an industrial metal, so a recession might not be the best for it. So why do you think that could be the trigger?
I definitely do think it will be the trigger, and you're absolutely right that something that could be very crushing to demand is not supportive for the silver price at all. In fact, silver again will probably overfall to the downside. In fact, both will fall. We actually have the more recent history of the events of March 2020, where you had both gold and silver fall. However, gold shrugged that off a lot quicker and a lot better than, for example, Bitcoin and many other stock markets did. Because the cure is proliferation, and gold is an alternative, is the original, I would like to say, money system, and fiat is the alternative proliferation system that is being benchmarked against something that cannot be proliferated any much beyond the supply rate, which is between 1% and 2% a year. So they will both go down, and silver more. But the cure that they will bring, the reaction to that collapse in silver, and we traded $11 in CV19 on the pullback, is the opportunity to reweight, because during that spell, if I bring go back to the metals charts and we leave our yield curve inversion, and as I say, we have alerts on all forms of charts set up here for when this might come. And this, by the way, there's a technical pattern for this as well. Let me just mention as well, Elijah, it's kind of interesting. You have a small shoulder in there. You have what we call a W head. So that's kind of like a W bottom. And then you've got a bit of a right shoulder structure setting up here. And we think you might squeeze and then break. And that could be, if I'm looking at this, could be around April, May, June, but it could also be July. It could extend. So I can never answer people with a time for all these events. I'm not that clairvoyant. However, I can give you a set of circumstances when you're now on borrowed time for that event, and going back above zero that's when I get out of most money in banks. If I have one counterparty broker that I think will survive even the worst, I go into puts on equities, indices, and everything else, and I wait for things to blow up. Sad to say, but that's the only way you can serve yourself and your family, and you make the upside on that. So that's how I intend to play it, and these are the questions and the way I answer when silver and when the demand destroying event. And I'm hoping that that's going to be something useful that others can refer to.
And when it comes to the banking system during this demand destroying event, do you see cracks or risks appearing there? And how, because it seems like when we're in a demand destroying event, it's good just to have cash, right? Because everything falls at the same time. But then the question is, where do you have that cash? Probably in the banking system. So your perspective on the risks in the banking system or the safety of money in the bank during this event?
It's very good capture by our arch controllers, I would say, because there's virtually very few safe havens. As you point out, banks have been part of the problem. And just taking a small step back, currencies borrowed into existence, and we have a debt crisis. And the intermediators of that debt to the economy are the banks themselves. So they are part of the biggest bubble, because they've allowed debt to be created and money to be created, and they've created, a lending environment. We have relatively high rates compared to what we've had before in an environment that so many are hyper indebted. We're actually having much lower growth in that environment. Where does the money come to pay the interest if the growth is down? People are borrowing in higher rates and assets are super high priced. All of that is part of the problem. So I would say cash and cash equivalents outside of the bank system is what you want. That's why I was mentioning if I expect there's a chance certain brokers will survive, I say counterparty risk will be huge, but I would be a shorter, and I'd use options potentially and other mechanisms on super fluffy equities potentially, and even the indices on stocks. For that might create a small bid a moment on the debt market, but never to the same extent that it used to. So it will bring in some bid on debt, and rates will be cut, and at that time you'll get a bit of money flowing into dollars and be into debt markets as per before, but never to the same extent. The trust in debt is lost, and that changed on March 2020. We've also on the show previously with you shown the sort of dichotomy relationship of the gold-silver ratio being extreme overvalued in favor of gold at 128, coinciding, which is negative for metals, and coinciding with hypervaluation of the bond market. So that was the turn of those trends, the bond trend and the precious silver is undervalued, grossly undervalued. And we say those trends haven't changed. And any new event similar will actually not see the same amount of bid going into the debt market, even if everybody is in absolute fear financially and thinks the government is the safest hands in the house, which I don't. So cash equivalents and shorts, I'm afraid, and then ready to buy silver. That will be a silver call. Gold will rebound as too. It may be first for a few days, but once everybody hears that quantitative easing or proliferation and all the usual cures will come, I would imagine that's a point that silver will overperform. And you may find that that will coincide with our channel on the gold-silver ratio also breaking down. So you have multiple tests for something, but they will cross-reference each other and they'll all occur simultaneously. So if you have alerts, you'll have beeps going off everywhere, as I tend to do, and that's telling me it's here.
The downside risk in precious metals at the moment, when we see this demand destroying event, are there any price levels you're looking for gold and silver to possibly fall to? And that might give our viewers kind of a heads up, right? Because people, a lot of people can be shaken out when those kinds of events happen. So your perspective on where you think gold and silver will fall.
So here's an observation that I would like everyone to bear, which is related to the question you've just asked. What's actually happening is the cycles are shortening. In fact, I'm going to get the futures market on gold. I've got over here, Elijah, the bit of the gold futures. It gives us more history back to the 80s. And I've kind of highlighted in the pink the bull market runs and how lengthy the in-betweener pullback periods are. Those are the ice cold in blue periods. And what you'll notice is that the pullback periods are getting shorter. And this typically tends to come as you're getting closer and closer to a possible parabola blow-off event. In other words, the time needed to revitalize and go again is actually shortening and shortening. And this is part and parcel to go with the parabola of increase of issuance of debt. And as a result, you're leaning into an ever more needed bull market in metals. And because till now it's largely been contained, we haven't yet had that absolute blow-off event. As I say, 3,000, the 2,900s is just the beginning, and we actually have technical targets well beyond that, taking us to 7.5 potential. And that will come, much like Ernest Hemingway said about his bankruptcy, slowly at first. People will barely notice it, just like people are barely noticing we're actually in quite a clear bull market now, but then suddenly very violently. And that'll be even more so the case for silver. So this is something in terms of answering your question. Recognize the pullbacks are getting much shorter. The blue legs, the blue spells are actually getting a lot shorter. And so the notion of a demand-destroying event giving us an unbelievably deep pullback is not something I buy into. Even if they came out and said private ownership of gold is illegal, there'll be a black market somewhere, or the institutions will still trade a gold price, and I would anticipate that price would still remain strong. I can't think of a news event, and that was 2008 and 9. That was a depression. That was shutting the whole world down. So what's it going to take to do much more than something like that and then to continue on up? I don't really think it's going to be that significant. And I would see it all as a major buying opportunity, both for gold, but potentially even more so for silver, because then after that, silver may fall more and might recover faster. So providing you're not an overweighted holder on silver, you'll have plenty of ammo and you can rotate some of your gold into the silver for the higher beta move to the upside.
And you mentioned a buying opportunity. I guess that's definitely if there is even precious metals available, because I know at least on the physical side, there's often shortages that develop when prices fall dramatically or there's major economic news, right? If there's this demand destroying event, as you've been talking about, you'd think that demand for physical metal would go through the roof. And I remember back when we saw the banking crisis last year, COVID, when we had silver squeeze, the supply dried up super, super fast. Yeah.
Definitely the supply will dry up because people who have bought in stock at higher prices are reluctant to sell something on a temporary price that they don't feel represents the market. There will be, in some senses, there will be a slight reduction in demand, I think, because of weak hands generally. Most people don't foresee and don't have the living means to actually have regular income that throughout a shutdown. I mean, if you were a restaurateur during CV-19 and you were shut down and you weren't getting footfall and you had many weeks shut down and you still had to pay your landlord's rent, etc., you aren't thinking about buying silver. You're battling about to make your rent check at home. So you can also have that demand effect that you inadvertently referred to, but there will also definitely be the supply aspect. What you want to be is someone who is not adversely, unduly affected, and I think we all will be a little bit, but has plenty of powder on the sidelines so that you can be a buyer, because there may be forced sellers. So there could be stackers out there now that rely on a job. They've got a massive mortgage payment, a car payment, and everything payment. And even though they believe in silver and gold, they could lose their job. They could have a whole bunch of things. And the wife's going to say, do you want to eat or do you want to sit on your stack of silver? And they'll be forced sellers, what I refer to as forced, gritted teeth. And that's the big thing I worry for everyone out there right now. Do not be put in a situation that the only asset of value you have available if you lost all forms of income is your precious metals and you become a forced seller. Have the means somehow, and that might mean, bootstrapping other projects, etc., that you're not entirely reliant on employment in an environment that there'll be no new employment. You're not entirely reliable. You've got to have supply of stock. You've got to have almost a prepper, a financial and even beyond financial, a social and logistical prepper for all things you could need, and still have cash out of banks in the system. And not everyone's able to do that. I understand that. You sit there saying that. I'm kind of fortunate. You probably are too. But other people, if they lose their job, they're in deep, deep trouble.
I think it's very good to think about these kind of contingency plans, right? If things change, how are we going to, survive, and how are we going to make ends meet if there's a major economic shift? I think that's very good to think about. We really appreciate your time, Francis. Before we let you go, where can our viewers find you online? And did you have any last thoughts for our viewers?
Yes. I do feel that we will be talking at some point about the demand destroying event. It could come from many quarters. We specialize in wealth preservation and wealth building in reset times. And that's what we aim to do both in the Sniper Circle, our premium community. And you can follow us on the YouTube to get a little bit of a cut about what we're about, or you can book a call from the website, themarketsniper.com. But whatever you decide to do, even if you choose to engage with others, please prepare. Please prepare, because there's something coming. I'll finish with a funny story because people like a narrative and a tale. There was a lady who bought a fairly young baby python, and she was sleeping, she had it and she was feeding it, and it was her pet python. And it continued to grow as they do. And she started having it, lie with her in her bed. And she noticed that it stopped eating for 5 or 6 days and was often extending its body out the full length of her body. And she took it to the vet to say, I'm not sure what's going on, but he hasn't eaten in 5 days. And he's, when we're in the bed, he's lying lengthways to test the full span of my body. And he said, yes, he's planning on eating you. And in terms of, that's my view of the fiat system, the dark state, and the government. They are sizing you up, measuring you, capturing everything socially relevant on you. And it's not necessarily for a good reason in terms of you. So preparation is key. Don't trust the things you are being trained to trust. It's maybe not a friendly pet. And as a result, preparation for that is what we're all about. And I look forward to telling you more positive news on gold in the future.
It'll be definitely exciting to continue to track this with you about every month when we have you on. Thank you so much, Francis, for your time, and God bless.
Thank you, Elijah.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for March 25th through April 1st, 2024, while supplies last. First, we feature 2023 1-ounce silver Krugerrands at $3.10 over spot. We also have backdated 1/10-ounce gold Canadian maples at $35 over melt with a minimum order of 4. And finally, we're offering our choice 1-ounce palladium bars at just $119 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.